Hello, everyone. Thank you for joining me. My name is Ken Tapp. I am the CEO of Decentral Life. We trade under the stock ticker symbol WDLF. And before I get too far along here, you'll see that I've got our safe harbor slide up. Please understand that as we talk about the company today, and I'll look back at 2023 and talk about Q1 of 2024. And then I'll also give some projections on what we think will happen in the remaining part of 2024. Just understand that things change. In fact, as I'll get into in just a minute with some details on looking back at 2023, we'll talk about some of the things that happen in the markets that oftentimes will affect how we run our business technology incubator program, how we work with our clients, certainly how we focus on new technology that we can bring to market, and then helping to sort of navigate not just our own public company, but clients through the markets and timing their companies to either go public or look for a good acquisition target, or I should say be acquired, but sometimes also look for companies they can acquire as well. We feel like this is at the very core of our business model and therefore should be explained in greater detail to all of you, our fantastic shareholders. And so that is a good start for me to let you know that we are now in 2024 more focused than ever on Web 3.0 technology. That, of course, is blockchain technology. We began to put more attention into that 2 years ago. In fact, it was about this time in 2022, the summer of 2022, that we had filed our Reg A to uplist the company to NASDAQ or New York Stock Exchange. And at that time, in that Reg A, those of you who were shareholders at that time remember, much of our business model was focused on decentralized applications, and we were beginning to talk about where we felt the technology industry was going to go as it related to adopting blockchain technology. And moreover, as public companies like ourselves, we're going to be looking to do token offerings or tokenizing either their securities or creating utility tokens, even commodity-backed tokens in the future, and how our platform, our technology would provide many of those tools and services needed for them to accomplish that in a successful and seamless manner. We were not able to get too far along in the summer of 2022 with that uplisting because at that time, and it's clear now, the SEC was trying to figure out what the risk statements should be in either a Reg A or an S1 or S3 or that sort of thing. And what were all of the type of risks that needed to be explained to shareholders before they either invested in or bought shares publicly in the open market in companies that were operating in the blockchain space, and even more so in the financial aspect of the blockchain space. Well, if you were to fast forward 1 year to the summer of last year, 2023, what you saw was that there was some light beginning to shine on that specific type of language as BlackRock, Valkyrie, ARK Invest, and many other funds began to get closer and closer to having their own spot Bitcoin ETFs approved by the SEC. We were excited to see that because not only does that show a pretty significant sign in the markets that we've been predicting now for years, that securities and real-world assets were going to make their way into the U.S. markets and finally be seen as either a security or commodity-backed security or real-world asset tokenized, that it could eventually be trading in the U.S. And as we got to the beginning of January this year, every one of those spot Bitcoin ETFs were approved on the same day. That really gave us a lot more perspective on what that was going to look like going into 2024 and 2025 for more companies more funds adopting tokenization and those real world assets or securities. We had been betting on this because we had built in the summer of 2021 and followed through until spring of 2022, those decentralized applications that would be utilized now in the public markets and even in the private markets where companies were looking to eventually go public and have either tokenized securities or tokenized real world assets. Only a week or so ago, it was announced that Larry Fink of BlackRock and Ken Griffin of Citadel had combined forces and planned to launch the Texas exchange, in which, if you read the tea leaves, Larry has been talking now for months that they will be tokenizing 10 trillion or more of their real world assets at BlackRock. You can imagine that all of the other funds and groups out there are looking to do the same thing. So all of that being said is really to just underscore the fact that we saw this eventually happening. We knew it would take a while, but we also wanted to position ourselves as leaders in the decentralized application space to support public and private companies looking to go public with their tokenized securities. Many of you also know that our own clients have tokenized their securities or have utility tokens, non-fungible tokens as well, and have been preparing themselves to be able to use tokenization in their own business models. We have, as a technology business incubator, been promoting that, again, assuming that this was an eventual. And we're excited that it has happened this year. We're extremely excited. It has really dovetailed into the rest of the consulting work that we've been doing with our clients over the last 6 to 9 months. That's more clear with Leica Re as one of our clients as it goes public, and it's in the real estate space. So you've heard about fractionalization of real estate, the tokenization of that real estate, and what that is going to do to disrupting the real estate industry in the future. But that disruption isn't always a bad thing. In fact, oftentimes disruption comes from creating new solutions to the problems that are at hand. And right now, the problems at hand in the United States real estate market, especially the commercial real estate market, is that we have many regional and super regional banks having to deal with commercial real estate not being financeable or refinanceable at these high interest rates. And in many cases, the owners of those commercial properties are just handing the keys back to those banks. Now, there's another side to this coin as it relates to the tokenization of assets, and that is the holding of those assets and where they're held. We have been talking about this for quite some time. There's the traditional manner in which, just like your stock securities in a company, those are held with the transfer agent as a private holding, and then eventually that gets moved over to, say, holders brokerage account so that they can trade those in the open market. Well, the crypto markets are very different. Tokenized securities can operate 24/7, 365 days a year. And so some of the tools that we have been working on this last year is to help those transfer agencies kind of transition into these digital asset holdings for the issuer and their shareholders. We've made a lot of progress there. We're going to continue to focus on that in 2024 and beyond, though we do feel like in the second half of 2024, we will have all of the viable decentralized applications necessary to be able to help and assist those transfer agents. This is going to become a new revenue stream for the company. So on that note, I want to take just a moment and explain what the markets looked like, what the disruption in the markets were over the last few years, and why we are so focused moving forward in tokenization of real-world assets and securities. And that is because going into that 2020 year of COVID that completely disrupted the stock market, it disrupted it in ways that people don't quite understand. First of all, there were new investors or shareholders that entered the US stock market because they received money from the government that they were supposed to be using for rent or mortgage or groceries and that sort of thing. And maybe they had enough savings, so they took that money and they put that into the stock market and created this, robust liquidity in 2021, leading into 2022. The markets had not seen anything ever like that. That was very, very disruptive to many sectors, but specifically as it related to us at the time, the cannabis industry, because we have MJ Link as a company that was a client. It had spun out of the Social Life Network, where we then were able to get that company set up for its own public offering. In 2021, we began the process of taking that company public through a Reg A offering. We believed that at that time, not only this new liquidity that entered the market was going to be able to make that a very successful IPO, but we also had been led to believe that safe banking was going to get passed, ideally in Q1 and at worst in Q2 of 2021. Safe banking still has not been able to pass through Congress. And that is the most important part for any private cannabis company looking to go public in order to have a successful public offering, or as an existing public company to be able to continue to tap into institutional investment so that they can grow their companies. Because that did not happen, the entire cannabis industry has had a huge step backwards. And that huge step backwards for many of those companies meant that they lost up to 90 or 95% of their market cap value, making it impossible for them to go out and raise additional capital so that they can continue operations. That then made it very difficult for these companies to operate in the legal cannabis market. And because of that, you ended up seeing many of these companies fall back into the illicit market. There are many other factors there. We have an increased cartel activity in the United States that is, of course, controlling a lot of the illicit drug industry. And because of all of this, and the fact that safe banking has not been passed, we believe, as a tech incubator that operates with MJ Link in the cannabis industry, that despite the fact that this administration has most recently talking about rescheduling cannabis to a Schedule III drug, that there is no clear path for companies to tap into the institutional investors in the markets. And so as a result, we made the decision and began that process in Q4 of last year to bring back into the fold MJ Link into Decentral Life for two main reasons. One that I'm talking about now, which is there is no clear path to get that company public and get access to institutional investment because safe banking has not passed. And despite the fact that there might be some sort of kind of breather for the cannabis industry to get some access to capital because of rescheduling to Schedule III, it doesn't give a clear path for private companies that are looking to go public in the cannabis space to be able to have access to institutional capital. Therefore, because, and the second reason, MJ Link through MJ Invest and all of the other applications besides the social networks that operate inside of the MJ Link company, and there are many, many applications that are used simply by clients. They're not social in relation. They are used to monitor what their stocks are looking like if they're a public company, communication directly with shareholders, and so on and so forth, like marketing tools and all of this, that IP, which belongs to MJ Link, would be better suited at Decentral Life so that Decentral Life can then go out and begin to license that IP as well. I think it needs to be made clear that Decentral Life as a technology business incubator, which does license its social technology and its e-commerce technology, does not license all of the technology that is used by its clients. And in this case, MJ Link does have its own technology that we feel we could use at Decentral Life to go back out to not just public cannabis companies, but public companies in general that are also suffering from this disruption in the stock market, over the last few years. So let's go back to 2021. We had this massive infusion of liquidity in the markets. Not just cannabis companies increased in value, but so did so many other companies, in fact, even our own. Then when that liquidity fell off, and the process in which that happened that most people don't quite understand is that at the beginning of 2022, there were signs that the Fed were going to increase interest rates. The entire industry did not think it would be increased as quickly as it was. In fact, literally in just over a year, interest rates went up 5%. That was done in order to slow down inflation. There has been, and this is the point that I'm bringing up, there has been an enormous amount of guessing, not just from the markets in general, but from companies like our own, be it an accelerator or an incubator or a consulting firm that tries to help companies navigate into the public markets on when the right time to do that is. And this has had a very adverse effect on our ability to get these companies through that public offering process earlier when we thought we could in 2022 and 2023. However, there's always a silver lining, and that's our job as consultants to these companies and clients in general to look at what's happening in the markets and make certain that they are positioned and timed just right to go public. In the first quarter of this year, we accomplished that for both Leica REIT and Outdoorsman to go public. And of course, in the last quarter of 2023, we positioned MJ Link to be reacquired by Decentral Life. We are still in the process of reacquiring MJ Link by Decentral Life and expect that to happen soon. We have both Leica REIT and Outdoorsman prepared to go public when the timing is just right. In the first quarter of this year, there was hope that the Fed would maybe begin to bring interest rates back down, even if it was just a quarter of a point. That would show a sign to the markets that in the future, that would continue to come down and that capital could loosen up to move its way back into the markets for liquidity. We held our breath and that did not happen in Q1. And so that showed that there was not a good time for us to do that until we saw more indicators as we got into April and into May. And here we are just this last week, going into the second week of June, and there is still an indicator that that is not going to happen. And so we are positioned with these companies as clients to have them go public anytime that is the right timing for that. We hope that might be in the next few months. But it will be entirely contingent on what happens with interest rates and this capital making its way back into the markets. For those of you who don't understand why you need to have that capital in the markets, or even why safe banking would have brought capital into the markets, you need to understand that to go public, you must have a lot of interest and a lot of capital in the markets for people to invest in those companies. If they go public without that interest and without that capital, the stock price will plummet. If the stock price plummets, so does the market cap or the value of that company plummets. That has, for us as Decentral Life, who has a 15% stake in these companies at the time in which they go through a liquidity event like an IPO, that has a terrible effect on our own balance sheet. We would on one day have 15% of a pretty large market cap right after the company went public. And then as the stock fell off and dropped, say 50 to 90+%, so would our balance sheet. We would have a false start on building a much better balance sheet and foundation for the company to continue to go out and grow its incubator program. Moreover, the companies that are going public, those shareholders and investors that get into those companies prior to going public, and the shareholders that buy that stock right after it goes public would all lose their money. MJ Link, as it was going public back in 2021 or attempting to go public in 2021, we knew based on a quarterly basis that the markets were being less friendly to cannabis companies, those who have been invested in public cannabis companies through, let's just call it 2017, 18, 19, 20, 21, 22. all know that those companies, those public cannabis companies, have bled off in market cap, some up to 99%. The same exact thing would have happened with MJ Link. All shareholders would have lost almost all of their money that they invested in that company had it gone public in 2021. In 2022, when we thought maybe there was a chance that safe banking would have been passed, and that would have been just for the cannabis sector, a green light for going public. And it would not have been a green light for going public with like a RE or outdoorsman, because in hindsight, 2022 had a fall off of IPOs real quickly. In 2021, 1,200 plus IPOs in the US. In 2022, only 180 or so. In 2023, only 150 or so. What that means is that it's a very unfriendly market for companies to go public. And the sign of safe banking passing in 2022 could have given us that opportunity to do so. And we expected that would happen, and it did not. In 2023, we held out a little bit of hope, but by then we had already had our backup plan. Our first backup plan was to be acquired and merge in with INQD. We had signed a non-binding LOI to make that happen in early 2023. It didn't work for them. It wasn't going to end up working for us. We came out of that LOI in the first or second week or so of May of 2023. And then Leslie Boxcore of INQD and I started to work towards a different plan, our plan B, if you will, on how these companies could come together. And of course, we announced in Q4 of last year our joint venture, and we're moving forward with that as not only a great plan for both of our companies, but a really good plan for the cannabis public companies that are out there. The cannabis public companies that are out there, which back when we were servicing those companies with MJ, our MJ micro event and our MJ Invest platform back in 2019, indicated there was about 430 or so public companies. Some were just going public and they didn't quite have their footing. Now that has dropped down to 80 to 85 public companies. So you could see how many of those companies just went out of business or decided to quit filing as public companies. And so we see those 80 or so companies as great targets for our joint venture. And that's what we've been working on now for the first 2 quarters of this year. And we're excited about the progress that we have made. We will have a separate update with both MJ Link, Decentral Life, and INQD on what those updates look like for Q1 and Q2. I won't get into that on this update. But now that you understand that Outdoorsman, Like-A-Ree, MJ Link, and that joint venture are all moving forward at the best pace that they possibly can, I'll just add this, that we do believe that the markets this year are going to start to come back. It could be the last quarter of this year. We'll cross our fingers. It's the third quarter of this year. And we will expect those friendlier markets for IPOs or companies going public to certainly be available to us as we go into 2025. We believe, however, that both Outdoorsman and Like-A-Ree, given their progress as clients to roll up these other companies, and total, we've been helping them and consulting with them to roll up as many as 15 companies between the two companies. Rolling up companies is not a guarantee that a company starts through that process of a non-binding LOI and then moves through an LOI and into a purchase agreement. And then, in the purchase agreement process goes through an audited financials, has that pass, and then ends up becoming acquired by one of those two companies. There's never a guarantee of that. And there's almost always some sort of skeletons that are hidden in the closet on those companies that are being acquired. But I will say this, that of these 15 companies, we feel very confident that eventually, whether it's prior to Like-A-Ree and Outdoorsman going through their public offerings, or just thereafter, that all of those companies are going to get acquired. That has taken an enormous amount of our time in the first and second quarter of this year, which is why we have been generally quiet with updates for Decentral Life. If we were to do an update a month ago or 2 months ago on a weekly basis, that update would have become relatively stale. And so we wanted to make certain that we could get to the end of the second quarter here as we head into the end of June and give you a bit of insight on what's happening with those two companies going public. And understand that the markets that changed on us on a really not just an annual basis since 2021, but a quarterly basis since 2021 have at least settled, and we have better vision on what's going to happen here going into the next couple of quarters and into 2025. Now I'm going to finish on this kind of market conditions or state of the markets by pointing out that tokenization and the crypto industry and cryptocurrency and all of these things around blockchain are going to be a big boost in our business model moving forward, not just in generating revenue, but more importantly, being able to bring and work with additional clients through our tech incubator, sometimes outside of that tech incubator, so that we can help those companies really utilize the decentralized applications that we have created. We're extremely excited about what has happened this year because we made a lot of predictions over the last few years that this would happen, but all of those predictions were contingent on much larger factors that were completely out of our control. The SEC approving these spot Bitcoin ETFs and watching what's happened with this new Texas exchange come about, knowing that if BlackRock is going to tokenize $10 trillion worth of real world assets, that's not something that they would have just come out and said, that's something that they have been planning for quite a long time, and they have a clear path. And that same clear path that they're on is the clear path that we are now on. A lot of validation to our business model has been added this year that makes us very excited that what we've been focused on for the last couple of years isn't going to end up being a waste of our time and our money and our efforts. In short, we're very excited about all of the value that these companies are bringing to Decentral Life and all of the things that are going on in the blockchain space is fitting perfectly inside of our own model. Many of you know we used to be called Social Life Network. We changed our name to Decentral Life and pivoted directly into Web3 decentralized applications a couple of years ago, and now that is all coming to fruition. So let me talk just a little bit about our filings, our 2023 filing and our Q1 2024 filing, because I know everybody can read those, but they don't always tell the full story. And so what I'll do here is share that screen here. And we've got our 2023 numbers right here. We had a tick up annually in our revenue from 2022 to 2023. Just a bit higher. That revenue, of course, that is locked into those licensing agreements gives us, a bit of an insurance policy on an annual basis on knowing for sure that we've got that revenue there. Anything above that minimum licensing revenue is really kind of icing on the cake and allows us to spend a little bit more time, a little bit more money into building new technology or making our existing technology better, upgraded, or more suited for future things that are happening in those different sectors that we support with our tech business incubator. Our general and administrative total operating expenses from 2022, comparing it to 2023, went up significantly. That was almost entirely for all of the legal fees that we are having to pay to work through the different legal cases that we're involved in. We did have a legal case filed against us in Q4 of 2023. We are going to fight that with all of the information that they are looking for. There was a case that was, in our opinion, entirely false based on snippets of information that were strategically pulled from either podcast updates or press releases or anything else that supported a very false filing against the company. And so we will continue to spend money on the legal fees necessary to fight that. and to prove that not only is it completely inaccurate, but also to share that inaccuracy with all of you as shareholders so that you understand how false that lawsuit is. Now, you'll also see here from our 2022 through 2023 other expenses. That's the PPP loan forgiveness and other expenses related to that stuff, that went away. So we were able to clear up that 91,000 right there. And then, of course, we have, and this confuses people frequently. Let me go back to this screen. That our weighted average, or number of shares outstanding, which of course is the 7,394,792,892 shares. Our share count has not changed from 2022 through 2023. That is the same share count that we currently have. That means that we have not issued more shares. We are not going to issue more shares. We are not going to do a reverse stock split that this time last year we had positioned the company to be able to do, in order for us to do an uplisting to NASDAQ or New York Stock Exchange, because we knew that within that time period that we had that potential reverse stock split, that we would not have favorable market conditions for that reverse stock split to work well for the company and work well for shareholders. Again, when we don't uplist, we don't take a company public, we're always focused on making certain that shareholders don't end up having some adverse effect to their share value. And so far, each time that we felt like we could and decided that we wouldn't, that was because we knew that the share price would drop as much as 90% in a pretty short period of time, wiping out shareholders. So just understand that you would not want the effect that would happen to our share price and the share price of the companies, our clients that we're trying to help bring public, if they were to go public, because they would all at the time in the past. And what we believe right now is a bad time this month or next month to get those companies public, because the stock price would drop so significantly. So we are looking for some real key factors in the market. We're not going to share all of those because you have many moving parts here with how much liquidity is coming into the market, how many companies and their balance sheets are acquired, gone through the audits, and are part of the balance sheet and the S1 when those companies go public. And if you don't have all of that time just right, as well as liquidity in the market from retail shareholders interested in those companies, then there's only one direction for that stock to go, and that is down, which means that they cannot continue to go out with their business models that we've helped put in place now 3-4 years ago, a roll-up strategy to acquire more companies to add to those tech business companies. So in short, we will not be going and uplisting this company this year. And if there looks to be a better window for us to do that next year, then we will make that announcement. But in the meantime, there is no reverse stock split in place on our stock. And then I'll just move right in here to the condensed statement of cash flows. We don't have, at the end of 2023, much cash on hand. We, of course, had a better situation in 2022, but again, that cash is going into legal fees. So we're not wasting that money on additional personnel that aren't producing. We're not wasting that money on anything that can technically bring down the value of the company and make it more difficult for us to climb back to a strong cash position. We know that as we make our way through the legal expenses that we have right now, that we will be really well positioned cash wise. And that's of course our opinion today. That might change tomorrow or the next week or the next month or the next quarter, because we're always going to be looking at how we can make the company stronger. That isn't always by leaving cash on the balance sheet. That can be using that cash to create new tools, as we did years ago with the decentralized applications, so that those tools were ready for the marketplace and could generate additional revenue for us in the future. Okay, so there's an awful lot more to this filing, but I'll let everyone else go through it. I just wanted to touch on the statements here. And I'll just go right on over here to the Q1 statement. And you can see here from, let's see, try that one more time. Okay, well, it looks like I'm having a little issue there. So I'm gonna stop right here and I'll try that right over again. Well, gosh, my apologies. For some reason, Zoom is not pulling up the correct filing here. So what I'll suggest is that you go and look at our Q1 2024 filing and look quarter to quarter from what the first quarter of 2023 looked like, and then compare that to 2024. It's real similar. There's not a major change that is there. And of course, I've talked kind of extensively on what we've been focused on in 2024. Steady as she goes with our TBI licensees and their technology. We did in 2024 have a little bit of a bump up in revenue because of the ERP systems that we had press releases out back in, I think it was January and February, when both Leica Re and Outdoorsman had launched their ERP systems. Some of that expense building those and getting those live was a carryover from 2023. So we'll go and review all of that and just understand that that's what those differences are quarter to quarter from 2023 to 2024. I'm going to end there because what each of these companies is going to do, we'll have another podcast update with Leslie Boxcore and I about MJ Link, Decentral Life, and the INQD venture and what we're doing there. Extremely excited because we've got some big players that have gotten involved with this over the last quarter to help us have that business model really work well. I think we talked about it in the very last podcast update that Leslie and I had done. We do have the smart contracts for each of those public companies has already been created. And the process is to now continue to work with those companies to make that transition so that they have their tokenized securities. That, by the way, could take some companies a matter of a few more months. It could take other companies a few more years. But we believe that our solution that we've come up with is absolutely hands down the best solution for the cannabis industry, public companies, and how they will be able to navigate beyond the problems that the markets have created for them. So Outdoorsman will have its own podcast update here soon, like our will as well. Thank you again. As I wrap up this long update, if you do have questions and those are specific to Leica Re, Outdoorsman, or MJ Link, please be patient with those as we get those podcast updates out over the next couple of weeks. We'll have the links set up on our YouTube channel and on our website so that you can watch those updates and get tuned in. And then if you don't have all of your questions answered, or you have new questions that get created by those updates, then please send those to us so that we can get those answered for you in the coming weeks and months. In the meantime, thank you again for being supporters of our company and supporters of our clients. Take care now. The world as we know it is on the brink of a new era where everything is going to be tokenized. In today's video, I'm going to go through everything you need to know about tokenization, what will be tokenized, and what are the advantages of this new blockchain technology for your company. So what is tokenization? Well, tokenization is the conversion of ownership or rights of a specific asset into digital form. Tokenization allows you to convert indivisible assets into token format. Let's say that you want to sell the famous painting, the Mona Lisa. To do so, you would need to find sellers who want to pay hundreds of millions of dollars to buy it. Now, obviously, this will reduce the number of people who have fluid funds to buy the Mona Lisa. However, if you tokenize a painting, you can share ownership of the painting with multiple people. Specifically, if it's possible to own a fraction, for example, someone can become the owner of 5% of a painting or an asset.
This is only possible through tokenization. This is why most experts advise you to increase your knowledge of blockchain technology and cryptocurrency investing. Tokenization in blockchain opens up a multiple of new possibilities for companies and individuals. Yet, the concept is not new, and it's been around for decades. Even before the introduction of blockchain technology, financial institutions, especially since the 1960s, have been using tokenization to protect credit card and transaction details. Conventional tokens store information as alphanumeric tokens, and they pass the encryption function later. This process ensures that each token is unique, and tokenization using blockchain is quite similar to this process. Blockchain-related tokenization refers to a secure process of transferring the ownership of real-world assets and financial assets into digital assets. It's important to note that blockchain networks ensure that each transaction is encrypted in a block of information, along with the traceability of that transaction. And as a result, blockchain-based tokenization offers a transparent, secure, and highly progressive approach to evaluating and managing any asset of value. So how does blockchain tokenization work? Well, tokenization is the process of converting something into a digital asset or a token. And in the context of blockchain, tokenization refers to the creation of a digital token that represents a real-world asset on a blockchain platform. Now, tokenization can be used to create tokens that represent virtually any type of asset, including commodities, loyalty points, shares in a company, music or art, precious metals, credit, debit cards, or even real estate. The process of tokenization involves creating a smart contract on a blockchain platform that defines the rules and the conditions of that token. And once an asset has been tokenized, it can be traded on an exchange or used on other applications built on decentralized blockchain platforms. And tokenization can help to make assets more liquid and accessible to a much wider range of people around the world. The following are the most popular types of tokenization, starting with security tokenization. Now, that's the tokenization for validating the ownership of a particular asset or a right. A token is a digital representation of an underlying asset, and therefore it has all of the advantages of conventional securities or stock. In addition, security tokens can be programmed to have unique characteristics and features, much like a preferred share might have a dividend or a conversion to common stock shares at some point in time. Next, we have utility tokenization, which is the process of generating utility tokens in a protocol to take advantage of the protocol's services. It is critical to stress that utility tokenization does not mean the generation of investment tokens, and utility tokens provide the platform's activity necessary for the platform's economy to grow. Then we have fungible tokens, which is a token that can be duplicated or exchanged. It is not unique, and converting these type of assets into tokens is easy because they can be divided into fractional units. Now, the most common type of soluble token is gold. Now, non-fungible tokens, or NFTs, are assets such as music and artwork, like the Mona Lisa painting, that cannot be broken down into fractions. However, converting them into non-fungible tokens allows you to own all or part of them. These NFTs are unique and allow you to track your ownership history on the blockchain. So what are the benefits of tokenization, and why is the blockchain the future of decentralized finance? Well, let's start with increased security. One of the advantages of tokenization is that it can help increase the security of an asset. When an asset is tokenized, it is stored on a blockchain platform that is secure and immutable. That means that the asset cannot be tampered with, edited, or duplicated in the future. Accessibility. Tokenization can help to make an asset more accessible to a much wider range of people. This can facilitate cross-border payments of tokenized assets like commodities and precious metals. But most importantly, increased liquidity. One of the main benefits of tokenization is that it can help to increase the liquidity of an asset. When an asset is tokenized, it can be traded on multiple exchange platforms all around the world, allowing for 24/7 trading. So what industries will benefit the most from tokenization? Well, definitely equities. The tokenization of equities will have the most profound impact on the stock market in the future as public companies begin trading their digital security tokens on token exchanges around the world 24/7, so that investors will be able to buy and sell in the most liquid and efficient way. In commodities, the tokenization of commodities will allow institutions and investors to buy and sell commodities 24/7 as well, and the Internet of Value will be the new normal. Let's not forget real estate. The tokenization of real estate will allow people to buy and sell property 24/7 on the Internet. In addition, it will make it easier for investors as they will be able to buy tokens that represent a share of a property. And certainly, as we all know, currency. The tokenization of currency like Bitcoin allows the use of digital tokens instead of traditional fiat currency. This makes sending and receiving money even easier, especially when we're talking about cross-border payments. And in today's world, in the traditional system, international transfers can take days using fiat currency through banks, whereas the tokenization of assets allow you to transfer any value within seconds. In fact, tokenization has already had a big impact on the way the world economy works. Crypto adoption over the last many years has made it easier for businesses, financial institutions, governments, and people to trade assets globally. This has led to tokenization being used to raise funds for projects or a business. In the past, companies have generally used traditional methods such as banks or loans or venture capital to finance their project or companies. However, these methods are not always available to everyone. With tokenization, companies are able to raise funds by selling tokens direct to investors. This allows them to finance their projects and their companies without having to go to banks, lenders, or venture capitalists. We believe public companies will be the early adopters of tokenizing their own securities, and they will be able to reap the benefits of this amazing technology. Let us know if we can help your public company navigate into the crypto industry by tokenizing your securities and adhering to the correct regulations by the SEC. We're just a phone call or an email away, and we look forward to answering any questions that you might have.